And our mover and shaker this morning is the embattled CEO of Knight Capital, Tom Joyce. His company has opened its books to potential buyers after the computer chaos that cost it $440 million and caused mayhem in early stocks trading on Wednesday. Boy, did that stock trade down. Two people with knowledge of the matter say possible buyers include private equity firms and also at least one securities industry rival. Yesterday, Joyce gave a hint of his plans in an exclusive interview with market makers anchors Stephanie Ruhle and Eric Schatzker.
We got to make sure that we work with our counterparties, our clients, to get the answers they want, and we're pursuing that as we speak. And we're also exploring other alternatives, such as strategic investments or investors and other financing alternatives.
Well, for more on the challenges facing Tom Joyce and also what to expect in today's reports, Stephanie Ruhle is here with me now, and she's on the trading floor of Cantor Fitzgerald. Stephanie, I know you were working the phones yesterday on this story.
It was a hard day's night to just be funny about it, but Tom Joyce has a lot on his plate right now, Betty. And you know, we talked a lot about this $440 million loss, but you have to actually take a step back and say, what was involved in this loss? Suddenly, poof, where did these trades go? And this is where we start talking about strategic partners. Many close to the situation say the likelihood that Knight reached out to some of their biggest counterparties, like a Goldman Sachs or a JP Morgan, is most likely what the case is here. They believe that Goldman may have taken on Knight's positions from them, and Goldman is now acting as advisor as well as Sandler O'Neill to help them find a strategic partner. As you mentioned, possibly a private equity firm, possibly a broker-dealer. I'm here right now, as you said, at Cantor Fitzgerald. It could be Cantor Fitzgerald. I'm going to talk to Sean Matthews, CEO of Cantor, later on. Remember, Knight had, except for this snafu, except for this trading issue, a very strong franchise, especially in high-frequency trading. And their equity platform, Citadel, as you had mentioned earlier, could be a counterpart, could be a possible buyer here. They have a very big electronic trading platform, and that is what Knight has best. Also, if you think about what traded yesterday, the stock traded down immensely, but their converts traded up. And why? Because you have to look at the language. The way their language is written in their converts, if the company is bought out by a new majority stakeholder, well, those convert holders will get par. So hedge funds were in yesterday buying up these converts. So there's a lot of focus on Knight today. And what else does Tom Joyce have to do? Keep the people in the building. Last night in New York City, let me tell you, there was Knight Capital salespeople and traders all over town figuring out their next move. Tom Joyce wants to make sure he keeps that company intact and keeps his people together.
Right, and people there are wondering what is next for them and where their jobs are now.